meeting, automatic recorded, and that recording will available 1 or 2 days after. But you have noticed that after ending of the class, within 1 hour, I post the recorded class each and every day, and that is possible because I have a shadow arrangement in my computer. Now, we are talking CRA preparation of cost records. Now, I just show you one slide. I am sharing my screen. Can you see the slides?
Yes, sir.
Okay. Now, this is the PPT is for complete package of cost record and cost audit. But as I am topic by topic, I am taking the class, so I am taking the help of the PPT as and when required. Now, what we have preparation of the cost records. You have to know the basic rules, basics of cost record keeping. Number one is, I told yesterday also that if the turnover of any company exceeds 35 crores and which industry comes under the purview of cost audit, must keep starting the cost record. That means if any company under drugs and pharmaceutical industries and in any particular year his turnover exceeds, total turnover exceeds 35 crore, he has to keep the cost record from the subsequent financial year. Now, how to prepare the cost records? The cost record should be prepared as per CRA 1 of Companies Cost Record and Audit Rules 2014, amended up to 15th October 2019. You will notice that I have posted the Excel format of annexure to cost audit report, amended. They are also written in the date 15th October 2019. After that, no amendment has been done. So, cost record should be prepared as per CRA 1 only. One thing you must know, must have to be known, that a company is not supposed to keep a separate set of cost records. Previously, when the cost audit was based on report based, record based, separate industries keep the records as per cost accounting record rules. At that time, cost accounting record rules were there, and this concept of after introduction of companies cost record and audit rules 2014, the companies cost record and record rules, except for a few industries, have abolished. Now everything should be prepared except for few industries as per the CRA 1. It is common for everybody. So, before starting the actual record keeping, we have to see the CRA 1. And CRA 1, what does it indicate? How and in what manner you have to keep the records. If your existing records are sufficient to comply with the CRA 1, you need not keep a separate cost records. The records which are being maintained by the company is sufficient if the CRA 1 is satisfied. So you have to know whether CRA 1 is satisfied or not while auditing or while preparing cost records. I'll show one by one, step by step. Next, cost audit, annexure to cost audit report has to be prepared on the basis of the cost records maintained in the as per CRA 1 and cost accounting standard. There are another aspect, cost accounting standards. You have not only to comply with CRA 1, but also you have to comply cost accounting standards and generally accepted cost accounting principles. However, in some cases, analysis of financial transaction as per books of accounts of the company are required to comply CRA 1. What does it mean? It means basically you have to prepare the cost records, fill the annexure to cost records, cost audit from the data being maintained by the company. No separate books records is required. But for compliance of the CRA 1, certain financial data must be analyzed to comply with the CRA 1. I am giving one example. After introduction of Ind AS, their concept of prior period has been abolished. All income or expenditure, whether it pertains to current year or prior period, booked under a single ledger or general ledger, GL, single financial code. But as per our cost accounting standard 24, prior period income and expenditure should be eliminated from the cost of production. Here is the catch. Then what you have to do? You have to analyze each and every transaction whether prior period entry has been booked within the financial code that captured within the data or not. And if it is so, you have to analyze and prepare a separate statement of prior period expenditure or income. So to that extent, there are a number of cases. I will tell you one by one. But this is for simplicity, this is the very bright example of analysis of financial transaction for compliance of the CRA 1. Now, we have to go back to CRA 1. I request everybody to open CRA 1, which I have been circulated in the group yesterday, because otherwise you will not see here. It is very light, faint printing. Now, CRA 1 starts from material cost. Material cost means, can you tell what does it mean by material cost? Can anybody tell? What does it mean by material cost in a manufacturing industry? Anybody who knows what is material cost?
Material cost.
Raw material processing cost.
Raw material cost is a material cost.
Raw material processing cost.
Raw material processing cost, that is a process cost. Raw material, material and raw material processing cost is something different. Abhiraj, what is material
Yes,
cost?
sir.
What is material cost? You have all are costing student. You should know the meaning of material cost. How you are learning? I'm really astonished. The basic knowledge, basic funda is not clear for you. Material cost is that cost which constitute the total production cost. Number one. Number two, material means which exists in the final product. For example, if you take a plastic bottle, Taparia plastic bottle, PVC bottle, here PVC is the material and processing cost is something else. How to prepare the raw material to be converted to finished product, this is a processing cost. This is something else. Now, in jute bag, jute is the material. One argument is there, all material is not raw material, but all raw material is material. Material cost has two parts. Number one part is direct material and number two is indirect material. What is indirect material? Indirect material which is not directly attributable to the production process but required for completion of the production, for administrative reason, for selling and distribution overhead or production overhead. Direct material cost includes two aspects: raw material cost, process material cost. So material is a very big terms. Material does not mean the raw material. Material means direct material, indirect material. Again, direct material means raw materials, process material. So these distinctions should be clearly understood. In some industries, some material is direct material. In some other industries, that is process material. I give in one example. In power industry, coal is a process material because by processing of the coal, the electricity is produced. This is a process material. But in the case of coal tar manufacturing company, coal is a raw material because from coal they will produce coal tar. Is it clear to you? Can I able to convince you? Anybody? Distinction has been clearly understood or not?
Yes, sir.
Yes. Now, in material cost, what you have to taken into consideration, that's the landed cost. What is landed cost? Landed cost means cost up to the production center. where the actual production is going on, the cost up to that point is called landed cost. It includes freight, it includes any duties, taxes, incidental expenditure, brokerage if any other expenditure, but that should be net off against input tax credit. If you get some benefit of tax in the way of input tax credit, that should be deducted from the total material cost. If you have some subsidy or if you get some discount, that's also to be considered while arriving at the material cost. Now second entry is the you can read thoroughly, but I am just giving the example. Employee cost. Employee cost here means direct employee cost and indirect employee cost. Employee cost related to the production is direct material and direct employee cost, and employees which are related with administrative function, selling and distribution function, and other allied function, repairing function, store function, that is indirect employee cost. But one thing must be kept into mind: before arriving at the employee cost, you have to consider not only salary but also cost to company. That means salary plus if they are providing concessional rate of company quarter, that also to be taken into consideration. If any repairing done in the repairing cost of the civil department cost of employees quarter, colony, maintenance, that should also come under the employee cost. Because employee cost means what actually incurred by the company for the employees. Here not only salary plus other medicine cost, hospital cost, these are all come under employee cost. Now whether it is a direct employee cost or indirect employee cost, that is depend upon the nature of the job allocated to the employees. This is simple. Number 3, one point or important point: if any penalties or recoveries has been recovered from the employees, that should be net off against the employee cost. It is applicable for any cost. If any recoveries or subsidies, benefits received against that cost, that should be deducted from the cost. That means net cost should be charged in the cost of production. Utilities. Utility means the items which required for producing an item. As for example, in the boiler industries, for diesel operated boiler industries, it is a utility cost. Water, if water is required for a particular manufacturing process, water is a utility. Diesel also in some industry utility. Whether a item comes under utility or raw materials or direct expenses, it depends upon the nature of expenditure used in that industry. That varies industry to industry. But if you have to arrive at the utility cost, here also landed cost concept is applicable. That means cost of bought out inputs of the utility should be taken into consideration, net of duties, taxes, for which you have given credit. Direct expenses. Direct expenses means expenditure which must be incurred in order to run the production, but that is not direct employee cost, the utility cost or material cost. All costs related to the production other than that, those above, comes under the direct expenses. And the fundamental policy is also the same, landed cost. This is a thumb rule. There, what are the costs incurred for obtaining these resources should be charged to the cost, net of taxes relief. Repairs and maintenance. Repair and maintenance means can be two types. One is bought out repairs and maintenance. Some company giving repair and maintenance outsourcing. For outsourcing repair and maintenance, the bill of the supply outsource agency should be taken into consideration. But for in-house repair and maintenance, you have to allocate the cost into the repair cost center, and all costs associated with the repair and maintenance must be booked under repair and maintenance. Now, if a company runs workshop within the factory, there must be some employee, their salary, they must be use some spare parts for repairing the machinery. That spare parts should be booked under repair and maintenance. There must be some electricity consumption, that should also be come under repairs and maintenance. So, what you have to allocate is, you have to determine the activities of the repair and maintenance cost as per the cost incurred against that repair and maintenance activities. Fixed asset and depreciation. Fixed asset and depreciation should be done as per the company's cost accounting policy. Proper adequate records should be kept, and for one thing, these are the common points which I am discussing. Proper records in each and every case. You have to keep the proper records from where you can get this data, what I am telling. So fixed asset and depreciation, you have to keep the data. In ordinary course of business, company is keeping all these records. So there will be no additional record to be keep. Now, some companies adopt the depreciation as per financial accounts. Some company adopt some different methods as per Income Tax Act. It depends upon the cost accounting policy of the company. Now, depreciation should be allocated activity wise. That means depreciation of machinery, plant and machinery, building, equipment directly related to the production should be booked under production cost center. But depreciation of related to production, selling and distribution should be booked under selling and distribution overhead. I am giving one example. The factory building, factory machinery, depreciation should be booked under production cost. But if the distribution machinery through which the production will be dispatched, that depreciation should be booked under selling and distribution overhead. That is not to be considered as a direct depreciation. But in finance, total depreciation is charged in the profit and loss account. There will be no segregation. Here depreciation should be booked as per activities. Activity wise depreciation should be calculated. Whether it is production related, whether it is service administrative overhead function wise, or selling related activities. Now overheads, all indirect expenditure, whether it is a material, whether it is a labor, or whether it is a other expenses, must be absorbed in the production through a particular reasonable basis, through apportionment. Up, each and every company has the right to book the to apportion the overhead as per their cost driver. What is cost driver? Cost driver means the ratio through by which the indirect expenditure allocated between the different cost centers. Now, if you do not have the proper records of indirect material, indirect labor, indirect expenses, how can you allocate? So proper record has to be kept in mind, has to be kept, and in costing, in normal course of business, that is keeping. I will show you what will be, how the actual financial data will be allocated activity wise. I will show today itself. Administrative overhead means any expenditure related to administration, and obviously it is indirect. Transportation cost. Transportation cost means for transporting the finished goods or transporting the raw materials, direct material, and any resources. For proper record should be kept. Royalty and technical know-how. Royalty and technical know-how, what is this? If you use for a coal industry, if you are using the land of the government and extracting the coal, you have to pay the royalty per ton. And what is technical know-how? You are using, if any company using technical know-how of another company, he has to pay for that, using that technical know-how. The Maruti Suzuki car, Suzuki has developed the technical know-how, and before, from the very beginning, Maruti is using the technology of Suzuki, and Maruti Suzuki till today they are adopting the Suzuki technology, but in some vehicles they started their own technology. So this is technical know-how. You have to pay, Maruti has to pay the Suzuki company, Japanese company, for technical know-how. Research and development expenses. Any manufacturing company or any company have a research wing for development of production, for development of services. So all such expenditure comes under research and development expenses, and these are indirect expenses. Quality control expenses. For maintaining the quality of a production, companies incur expenditure. This is called quality control expenses. Here also you have to book separately the quality control expenses. Pollution control expenses. Here pollution control means in chemical industries there is a huge pollution, and for government is as per government instruction you cannot pollute the air. So there must be some measures. Company has to take some measures for control the pollution. That is comes under pollution control expenses. Service department expenses. Now, each and every company has the two types of department. One is production department, which is called production cost center. Another is service related service. Some departments which give service, the stores, workshop. These are the service department. Service department expenditure. All service department expenditure are indirect expenditure, and proper record should be kept for allocating to production cost centers as per their usage. Packing expenses. Packing expenses means to pack. There are also some two types of packing. One type of packing material expenses is primary packing. If you consider a cup syrup, the bottle is a primary packing, but the wrapper under which bottle is kept, it is a secondary packing. For primary packing and secondary, primary packing should be a part of cost of production, but secondary packing should be part of distribution, selling and distribution expenses. That should be activity wise differences. Finance cost. If you borrow some money, you have to pay interest. That is called finance cost. Capacity determination. You will see when I will go to the fill up of the annexure to cost audit report. Capacity determination is the vital thing, and capacity determination of any company must be done by a technical person, technical department of the company, of that company. Capacity means how much is the capacity for producing. There may be practical capacity, there may be actual capacity, actual production. There may be ideal capacity, and capacity generally written in the machinery, when you bought the machinery. But in coal industry or power industry, capacity is determined some in little bit different way, because in coal industry equipment changes frequently, introduction and withdrawal of equipment for a particular mine. So each and every year there is a department, research department, coal mine, CMPDI, that who will assess the capacity. In power industry, generation plan twice generation should be, capacity should be determined. If the generation plan of the company is to produce to 12 megawatt, that will be the capacity. But if the capacity of the plant deteriorates because of non-functioning of a particular portion of a plant, the capacity will change. So capacity, each and every year, capacity may change, may not change. So that completely technical matter, and we finance people, as an auditor, we have to accept the technical data produced before you for capacity determination. Work in progress and finished stock, captive consumption, byproduct, joint product, these are the all terms associate in the CRA 1 and detail you have to read thoroughly. Now I have covered most of the cost. Now I am showing you how to actually prepare the cost records, keeping in view the cost accounting standards which I will discuss after returning from USA one by one, and as per CRA 1 and cost accounting generally accepted principle. Now you have to take a look I am taking an example, hypothetical company. This is the actual trial balance. You see, this is the real trial balance extracted from SAP of XYZ Company Limited. Opening balance, debit, credit, net realization, closing balance. Can you able to see the sheet? Anyone can tell?
Yes, sir. Yes, sir. Yes.
This is the trial balance, and the profit and loss and balance sheet is prepared taking the closing balance, net balance before rectification entry, net before rectification entry this much. There are several column adjustment, but closing balance, this is the closing balance from H. We are dealing with this figures. Now, what is this code? In some industries where SAP is not introduced, that is called financial code. Where SAP has been introduced, this is called SAP code. This code is nothing but a piece of a code name of a ledger under which similar type of expenditure captured. That is land and freehold, A07010 is meant for land and freehold. A07010 is the landscape. Here A means asset. These are all asset code. These are all asset figure in the trial balance. These are assets. L means liability. These are all liability. E means expenditure, and here I means income. I means income. So this is the exact trial balance of the XYZ Company Limited. It is a power distribution company. Now, tell me one thing. What is the meaning of power distribution company? Can anybody tell? What are the different type of power companies? Can anybody tell? Shaili? Abhiraj? Herald? Ishika? Rimi? Can anybody tell what are the different type of power companies? General knowledge should be there. Very poor general knowledge. It means you don't have
Sir, three types of company.
three types of company. Who told? Deepak Jogi. What are
Deepak
the
sir.
three types? Tell me.
Transmission, generation, and distribution.
Correct. This is the exact reply which I expected. Thank you. There are three. Previously, there was a one single company in each state. But since long, there are three divisions. One is generation, who only generate the power. Another is transmission company, who only transmit from generation to distribution substation, and the distribution company distribute the power door to door. The person who gives the connection to your home is a distribution people. But if you see, when you go by train or by car, you will see a big post pillar erected in the field, in the paddy field, and wires are coming through that pole. That is the transmission asset. The power generation, duty of generation, generating power is the generation company. Generation company sold the electricity to the distribution company. But distribution company, it is not a material, na? Electricity is not a material that he can carry by truck. So there must be some medium, because distribution company needs electricity at their substation for further distribution within the local area. So intermediary company is transmission company. And fortunately, I have audited for more than 3 years in power distribution, in several power distribution, generation, transmission company, and also keeping records of different companies. So this is the data is related to the one of the distribution company, XYZ Company Limited. I purposely hide the name, original name of the company, and rebuild the data, trial balance, manipulating the trial balance, because as per code of conduct, we cannot show the data of a company without taking permission from them. But I have to show you the process. So I have, from last 2-3 days, I keep the trial balance ready by multiplying or subtracting the figures. No figure is actual. All figures have been cooked, and all names have been cooked. I have suppressed all the data, actual name and data. Now, this is the actual trial balance, exact trial balance. Trial balance in real life should be like this, not as per your study note or textbook, which you have used to see. It's a big trial balance. Now, you have to prepare the cost record, or rather, I have to say cost. There is no cost record, because company is already keeping the records, books of accounts. That is also sufficient as per if it satisfies CRA 1, which I have told in the beginning. Now you have to fill up the annexure to the cost audit report for producing before the auditor. And now how you will prepare, I will tell you, show you. I think everybody seen the annexure to cost audit report. Anybody has not seen? Can I repeat it? Can I show it again? Yes, I will show you again before starting. Now, this is the annexure to cost audit report which I have already submitted. This one is, there are 4 part. Part A, Part B, Part C and Part D. Part A is a general information. Part B is meant for manufacturing industries, where actual data is to be given, quantitative data and financial data, cost data should be shown. And Part C is for service industry, same cheese. Part D is common for production and service centers. Now, para A1, part A, para 1, we are calling simply in simplicity A1. A1 is the details of the companies, that is the corporate identification number, registered office address, email address of the company, date of reporting of the financial year, date of beginning of reporting year, end of reporting year, date of previous year, end of previous year, level of rounding of whether absolute, thousand or in crores or lakhs, whether Indian accounting standard is applicable to the company, number of audit committee meeting during the audit under which cost auditor was invited, number of audit committee meeting attended by the cost. This is the simple general rule anyone can fill after having the data. It's the company's data you have to do. In A2, you have to fill the details of cost auditor, the name, PAN number of the auditor signing the report, and membership number and SRN number, where SRN number is vital. SRN means service request number of CRA 2, as we already discussed yesterday, that when a company auditor is appointed, central government has to be informed through CRA 2. If you file the CRA 2, there will be a SRN generated, that is the receipt that you have submitted properly the CRA 2. So here this CRA 2 number has to be given. So if you do not submit CRA 2 and conducted the audit, you cannot file the audit report, because the first and foremost thing is you have to file CRA 2 in time. Number of audit committee attended, the date of signing the report, place of signing. This is the related to the auditor and this is related to the company. A3 is the different items written here for cost accounting policy of the company, on which the cost records should be prepared. One thing must be known: what are the items? Briefly describe the cost accounting policy, identification of cost center and cost object and cost drivers. What are the cost centers? Which department constitute the production cost center? Which department constitute the service cost center? Which is your cost object through which you are collecting the cost, and which is your driver, cost driver, through which you are apportioning the service department cost. Accounting of material, how you are accounting material, packing material, store spares, employee cost. Accounting and allocation of absorption of overhead, what is your policy? Here the company writes the policy as per this format. Each and more or less each and every company writes in same direction, but in to be very particular, the cost accounting policy is a very vital document for a company, because your cost record should be kept as per cost accounting policy. That means CRA 1, cost accounting standard, generally accepted cost accounting principle, and cost accounting policy. All should be keep in mind while booking a cost under a head. These are all to be kept in mind. Now A4. A4 is a product or service details which is nothing but a replica of profit and loss account receipt part. I will show how to compile it. For the time being, it is nothing to do with your cost record, whatever the case may be. It is as per profit and loss account receipt part. That means revenue, income, income from net revenue, income operating revenue, like this. There is the item total net revenue, other operating income, total quantity, other income of the company, expenditure, extraordinary expenditure, other comprehensive income. This is come from profit and loss account only, from nothing else, and the figure must tally with the profit and loss account. Auditor will see whether it matches with the profit and loss account or not, audited accounts. B1 is a quantitative details of a manufacturing company. Here 3 types of data is available, has to be put. Number 1, available capacity as per technical details, capacity enhanced during the year, and final capacity. Actual production and adjustment of finished goods purchase and stock adjustment, and quantity available for selling and actual sales. The quantity available for sales and actual sales must tally, because you have already adjusted the closing stock and opening stock difference here. So this is a quantitative data from the management, recorded data, reported data. Now B2 is average cost statement. Here it should be prepared from the trial balance after regrouping of the different SAP code or financial code, which I will show you later on. And this is equivalent to the profit and loss of a financial accounts. But there's some difference, because in average cost statement, as per cost accounting standard, we have excluded some cost, some expenses, and excluded some income also. And you have to keep track which item is excluded and which item is which income is excluded, which expenditure is excluded. Income and expenditure excluded from the cost of production has to be shown in the reconciliation statement. B2A to B2C, it is the details of material, industry specific expenses, and direct material, utility, and industry specific expenses. Material consumed is known to you. Direct utility, I have already told that what is utility consumption, you have to give the details. Details of industry specific, what is industry specific expenses? It is in the format. Industry specific expenses. Each and every industry have a specific expenditure only to be seen in that industry itself. That is why the name comes here, industry specific expenses. In the coal industry, OBR adjustment is a industry specific expenses. expenses on mine closure expenses is a industry specific expenses. OBR adjustment key, what is this? This is a complicated thing. I am giving you in a simple term. In open cast mines, some, if you remove mud, coal is exposed. So when preparing the project report, it is mentioned in the project report that how much mud has to be removed to extract how much coal. That is standard ratio. But in practice, it cannot be happen. And in the actual, how much OB has been removed and how much coal has been extracted, that is the actual ratio. So this is the variance should be adjusted through the OBR accounting, and the cost of OBR also to be adjusted, because in a particular year maybe OB production is more rather than coal, and another year coal is much more extracted, OBR is less. So in order to uniformity, OBR adjustment is there. It is only available in the mining industry. Any mining industry, it is available. Similarly, mine closure expenses as per government norms, you have to take the lease from government 99 years, and when you left this place after extracting your minerals or coal, anything, you have to rebuild the surface as before, and for cost you have to keep set aside some money with controller, coal controller or mining mineral controller, so that you can utilize that money at the end of your operation. That cost is the mine closure expenses. So these are the peculiar thing present in the mining industry, but not in the any other industries. C1, C2, C3 is like that for service industry itself. Now D1 is a production and service profitability. It comes from B1, B2, B3 or C1, C2, C3, whatever the case may be. For service industry, here is the come, you need not to fill, it will automatically come if you fill up this one B2 or C2. D2 is a reconciliation. You start from cost accounting, profit as per cost account. That means from B2 or from C2. You have to start from here. You have to add the income which you have not considered in the cost of production in B2, and less the expenses not considered in the B2 or C2, and difference of under absorption, over absorption, and difference in valuation of financial valuation of closing stock and opening stock of financial account and cost account. At present, stock has been valued at cost in cost accounts, and in finance, cost or NRV, whichever is lower. So there must be some difference. Now a cost accounting standard is under consideration of the institute, that it should be at par with the finance department, finance valuation, so that there should not be any difference, because it has been seen that where the cost of production is huge and selling price is less in comparison to the cost of production, a huge difference is coming with the financial records, and the figures are distorting. Unrealizable value is coming. So institute is actively thinking for introduction of a cost accounting standard which is not at present there. Now D3 means value addition, computation of value addition, earning details and distribution earning. This is a value addition. This should be prepared absolutely from profit and loss and balance sheet, not from your cost data. This should be from profit and loss and balance sheet. D4 is the ratio analysis, reserve capital. These are just all financial terms that is to be prepared from financial profit and loss and balance sheet. D5 is a related party transaction. This is generally taken from the financial account as disclosed in the financial account. As it is, figures is taken here. Information is taken here. Another last one is indirect taxes reconciliation. How much you have payable, how much indirect tax GST, cess and excise. In some industries still excise is there. So here our institute has prepared this statement keeping in view where excise is still exists. Excise, how much to be payable as per your production or sale, and how much GST should be payable as per your sales bill, and what is your input tax credit, and what is your net liability, and how much you have paid, and what is the balance, any penalty of that. In theoretically, duties and taxes payable and duties and taxes paid by the company must equal. But in reality, sometimes it can't happen due to the accounting year concept, because in accounts figures are kept in accrual basis, and in cash ledger also. In some cases there may be some differences due to unreconciled figures. There may be a case. So this reconciliation is vital by the GST department from the cost audit report filed in the MCA portal. They will see this data to match with their data of the return filed by the company. So this data must be prepared from GSTR 1 and GSTR 3B, most probably from annual return. It has to be prepared so that the data is not mismatched with the annual return filed by the company. Now these are the annexures, different annexures you have to prepare and produce before auditor. Is there any question from anybody? Tell me, because I will go into deep. Is there any question? Any question from anybody?
No, sir.
No. So how many persons have read the annexures? Because what I will show in next few minutes is a totally technical part. So before going to that, I have circulated the annexure. Please go through that one. I am coming back within 5 minutes.
फूड जो आज सेफ है, जिसकी डिश हम तीनों को राजीव के बाद सबसे ज्यादा पसंद आई। निक्की उतार लो अपना ब्लैक एप्रन, कभी मत पहनो और चली जाओ यहाँ पर। थैंक यू, थैंक यू। बिफोर द रिजल्ट एक ही चीज कहूंगी सबसे कि सेलिब्रिटी मास्टर शेफ में एक ही सेलिब्रिटी है, आपकी डिश। दैट इज द ट्रू सेलिब्रिटी। आप सेलिब्रिटी क्या कर रहे हैं हमें उससे कोई मतलब नहीं था। आप सोशल मीडिया कितना हाई है, आप कितने पॉपुलर है, फैम वी डोंट वांट टू नो, वी वांट टू नो व्हाट आर यू गिविंग अस टू ईट। So that's a reminder for everybody. जो सेलिब्रिटी को जो आपकी ये अपने सोशल
Yes, come back. I have to take the medicine actually. I forgotten to take the medicine. That's why I have took the leave. Now, tell me, have you seen the annexures which I have been circulated? Can I go into deep? Actual data mining? Can I proceed?
Yes, sir.
Yes. Okay. XYZ company. This is the file, actually working file. This is a working file. But you have to prepare from scratch. In distribution companies, regional accounts officer wise data is keeping. Here is the trial balance which you have to converted into lakhs and eliminating the assets and liability code. This is the data and this is the cost center. Cost center में sorry RAO wise data, different RAOs 31, 33, 35, 37, 45. These are the code, RAO code. That means this is a particular substation regional accounts office. Cost has been booked as per RAO wise. For this RAO, these are the cost in different financial code. In 33, these are the amount booked under different SAP code. Like this. Now we have to regrouping as per our average cost statement group, that is B2. Now here the company keep the data for service cost centers and production cost center at a time. So you have to segregate the service department cost and production department cost. So I have taken store trial balance and medical trial balance and deducted the stores and medical department. Now if you see any trial balance, you will see that this element has been prepared: material cost, utility, direct employee cost, direct expenses cost. This statement is as per average cost statement, exactly as per average cost statement, and financial SAP code has been kept here as per the cost accounting policy CRA 1 and cost accounting standard. For example, direct employee cost, repair and maintaining building, repair and maintaining residential. That means I have told you the repair and maintenance of building pertaining to the colony should be come under the employee cost. Here it is: dearness allowance, additional pay, overtime, all certain employee related cost comes here. I have to, so you have to go for chart of accounts of any company and map the financial code or SAP code accordingly as per average cost statement headings. Only then you can prepare average cost statement. Now, how you can do it? See, this figure has come through VLOOKUP command. In preparing cost records, VLOOKUP command is very essential. If you do not know VLOOKUP command, you cannot do. That means dearness allowance, you see the code E210201. This is dearness allowance under 51. Sorry, under 33, this is the dearness allowance E210201. This is uniform for all the RAO. 210201 is code, and we have to find out this one. What is the trial balance? Medical trial balance. It is a medical expenditure allocation. So we have to see the medical trial balance, medical TB. 210 210201. 210201. This is the basic salary. $33, $35, $41. 33 is there. 120,50643.00. 120,50643.00. For if you put the VLOOKUP command, selecting the sheet, this is the sheet trial balance of the medical department, and this is the FC grouping of the medical department, average cost statement. You have to put the command VLOOKUP. In this way, you have to allocate, remapping all the financial code according to your average cost statement. Now, this is FC grouping of actual FC grouping excluding service department cost, including service department cost. This is FC grouping of RAO expenditure itself, RAO office, regional accounts office. This is FC grouping of store department. This is FC grouping of medical department. So if I deducted total RAO expenditure by the RO expenses, store expenses and medical expenses, I can get the production figure, production cost center figure, because ROA expenses is the administrative cost, which is a service department cost, store also service department cost, medical also service department cost. You have to deduct. But if you get the direct figure of the different cost center, it will be much more easier. But in that case, in that particular company, it can't be possible. So I have to rearrange like this. So this is the RAO wise average cost statement. Now 31, 33, 35, 37 like this. So here you will see same format of the average cost statement. It is coming that the total RAO minus total RAO FC grouping RAO expenditure, FC grouping of stores, medical. So this is purely production cost of that particular RAO under different heads. Under different heads, this is the RAO wise production cost. And this is an apportionment of the different cost RAO wise apportionment, allocation of company overhead, allocation of hospital expenses, which we have kept deducted from the total RAO expenditure, hospital expenses, RAO wise office expenses, store expenses. These are to be allocated in the apportion in the production cost center, that is RAO, and it has been added here. See, this is the item total RAO expenditure minus RAO expenditure, stores expenditure, medical expenses and plus apportionment, because it is a repairs and maintenance and apportionment E23. Apportionment E23 means repair and maintenance. Store expense E23. E23 means store expenses. Store expenses actually stores is meant for repair and maintenance, spare parts. So it should be booked under repair and maintenance head. What I have already told you. All expenditure relating to repairs and maintenance should be booked under repair and maintenance. Likewise, all the RAO wise expenditure has been prepared from this data. Now, these are the income and expenditure. What are the income and expenditure? That is other rental income, poll rent. Purely financial nature of income and expenditure should be excluded from the cost of production, and prior period income and expenditure and financial provision should also be excluded from the cost of production. Rental income from outsider, it is not related to the production. Interest on loans and employees, interest on loans from outsider, interest on receipt from bank deposit, receipt from tax services, dishonored check, buyback adjustment, PIO expenditure, penalty charges, comprehensive income expenditure, other recoveries, prior period income and other income provisions, revenue grant. These are the all purely financial nature and should be, as per cost accounting standard, should be excluded from the cost of production. So here these are the chart. Now how this figure is coming profit as per audited production, audited product groups, profit as per unaudited, add income not considered and less expenditure not considered, profit as per financial account. This figure comes from average cost statement. We have RAO wise average cost statement we have prepared. See the total. This figure, this is margin as per total company as a whole. This is company as a whole, and this figure comes here. And add income not considered and expenditure considered comes from here. Total expenditure not considered 10565678, 10565678. Income not considered 1341704056, 1341704056. So in this way, and this comes under audited accounts. This is the audited profit and loss as per accounts. So far we have prepared the reconciliation statement D2 and B2. B2 of the company, that means average cost statement. This is this one, this column, and reconciliation, profit reconciliation part. Only this is constitute your cost records, means annexure. Other annexure to be prepared, it is D2 and B2 or C2. In this case C2. Now I have come to the RAOI annexure to cost audit report. This is as per annexure. Company's data. A2 is the this one. A3 is the cost accounting policy. A4 from profit and loss account. B1, B2, B3 is not applicable for this service industry. C1 for data from your provided quantitative data. C2 comes from the annexure we have already prepared. From this one you can see it. Direct employee cost 771032121. $77,108.21. It is converted to lakhs. That was full figure. Converted to lakhs. Now this is D1 is automatically comes from after preparing the C2. From here data is coming flowing here. This is sales, this is cost of sale, and this is margin. This year, previous year. D2, what has happened? Your profit and loss as per audited products, that means margin, your average cost statement, and this is the income considered, expenditure not considered. D3 is populated from value addition part from profit and loss account. D4 from profit and loss and balance sheet account. D5 is created from your financial accounts, D6 from R1 and R2. This is the annexure company as a whole. Now, the main tough thing is this one. You have to prepare this one only after mapping this financial grouping. You have to, this is the toughest work. You have to do it by using VLOOKUP command. From trial balance, you have to map this one as per financial code and groupings. This is called financial groupings. And this financial grouping, if you correctly done, your rest of the work will be very easy. But if there is any mistake, an auditor will check the groupings. Every auditor will check the groupings. Even if in SAP we are checking the operation, and one by one we are checking the average cost statement amount from the SAP in the before sitting in the system. So this is the whole work you have to done. Rimi,
Yes, sir.
have you shared the feedback form?
Yes, sir. Already sent in the
Okay.
chat
Everybody
box.
is requested to fill up the feedback form, and I have given you the nutshell. If I want to prepare the cost record in front of you, it will take at least 2-3 days. So I have already prepared and shown to you, and techniques I have explained. If there is any question, or if you want to know furthermore, you can question me. Is there any question or anything you have to know? Is there any question? Abhiraj? Abhiraj,
Yes, sir.
is there
Yes, sir.
any question?
No, sir. No.
Have you understood the process? How I have computed the
Yes, sir.
total mechanism? This is a
Yes, sir.
this
Can
is
you
the
share
work
this
of
Excel
figure
which you
mapping.
prepared?
Anybody who could not understood, please tell me. Please don't be hesitated. Ishika, is there any question?
No doubt, sir. No, sir.
Understood the process?
Yes, sir.
So if I tell you, I'll give the raw data, can you prepare the average cost statement?
So try.
You will try. Okay.
Yes, sir.
Okay. I will give you the details input after Sunday, and that will be your assignment for next 15 days or 20 days. You have to submit the total cost record as per company which I have shown. I'll give you each and every data to you. Not only to Ishika, to all of you. You have to prepare the data in your own hand. Only when you will be able to prepare, you will understand. So, but one thing is must be clear, you have to be very thorough in Excel and able to put VLOOKUP command effectively. If you put wrong figure will be go another column or another cell, and you cannot track it, because each and every data is booking in one or other cell and total will be same. हाँ अभिराज बोलो. Any point?
सर ये एक्चुअली शेयर कर सकते हैं क्या? Which you prepare
No,
XYZ
no,
limited.
I am sorry, I cannot share this data. Sorry, I cannot share the Excel sheet because there are huge number of data which is not to be shared authentically. As per code of conduct, I cannot share. I just show you the data. I will give you the another data, another set of data which you can use for preparing the cost records. So, if you have any single doubt, please tell me. I have given the blank format. I show the technique how to capture the data and grouping the data and how to apportion the cost and how to arrive at the reconciliation statement. I have shown everything. If you have any question or if you want to know further, you can ask me anytime. I am free. But I am sorry, I cannot share this data to you. It is a legal complication, legal compulsion for me. Okay? Sorry. But you have to you don't have to see the data. You have to prepare yourself. I will give you the trial balance and department code, and you have to prepare at your own. And if you stuck on any point, I will be here to help you. Anybody. I will give the data, final data.
Yes, sir.
Okay. I will give the raw data
Yes.
for practice by you. And if you have any problem, just book a one-to-one call through the consult expert. I will be here to help you. Okay. Everybody is requested to fill up the feedback form, and if there is no question, you can leave.
Sir, today class is uploaded on YouTube or not?
Today's class will be uploaded in the YouTube, but not I cannot share the Excel data.
Okay, sir.
You have to know only the procedure, how the data has been generated, annexure has been prepared. That is the only thing you have to know, not the exact data. And I will give that data to everybody for practice. Okay.